not just the tone for our discussion, but also the tone for introduction of Nicola. I'll hand it over to him in a minute to introduce himself, but a little brief about what his company is doing, Bima. Bima is actually is the only company in this region, or one of the only companies in this region, who's tailor-making insurance, who has pay-per-kilometer insurance, who's offering pay-per-kilometer insurance, a changing dynamics in the insurance sector, especially in the auto insurance, very widely needed. But how are they doing it? Why are they doing it? What made them do it? I'll let Nicola talk about it after giving you an introduction.
Thanks, Rahul. Perfect. I will need a clicker. Just very briefly. So what I'm trying to do we've been discussing quite a bit about blockchain in the finance context at large. What I'm trying to do will be to give a bit more context to blockchain in insurance. I'll try to do it by just presenting a bit of a framework, the main use cases that we've been seeing in the past and that we see going forward. And then introducing a specific product that has been in the making for quite a while, and that is specifically linked to the securitization of the risk using blockchain technology. So, just couple. Let me just say a couple elements around blockchain. Okay, so the value chain, the insurance value chain, is important to understand what we are talking about, because the insurance value chain is complex, and because it is complex, it is also traditionally inefficient. I mean, we are talking about people providing capital on one side and people subscribing insurance policies at the other extreme. But in between, the value chain includes multiple intermediaries. It includes an insurance company, retrocessioners, transformers, it includes insurers, it includes brokers, agents, asset holders that are pushing and distributing the products into the market. So that entire value chain eats up a good portion of the margin when we go through, and thus introducing efficiency for the capital holders who are fundamentally and in the end reinsuring the risk. So because that value chain is complex, there is the possibility of optimizing it. And we do believe that blockchain can be a relevant technology, to optimize the value chain throughout. But we need to start from pieces, and we need to start understanding why there is a space for optimizing this value chain. The main reason is that both sides of the extremes of the underwriting capital providers and the user buying protection, they are not completely satisfied. Why that? Because for the capital providers, it's not always straightforward to invest in the insurance risk directly, though it is a very interesting type of asset allocation, particularly given the uncertainties that we are seeing in traditional financial markets in the last that we have been seeing and will be seeing in the next few years. At the same time, reinsurance companies are traditionally very conservative because they need to pool risk. They need to have robust historical correlations before being able to introduce new products. And so the range of investment opportunities that are offered to the capital providers is traditionally limited. At the same time, when we look at the users buying protection, there is a whole set of needs which are not completely satisfied. And the lack of satisfaction of those needs comes on one side from the lack of ability to innovate consistently across the value chain, because you need to touch all the elements of the value chain to be able to bring a new product to the users and to respond to a specific new need. But also because traditional insurance companies, they are not widely well known for being able to engage users, to be affine with the new buyers, which will be the millennials in the 25, 40 years, and they will become the main buyers in the coming decade. So basically, there is a space for making sure that all the extremes of the value chain are more satisfied. And we do believe that blockchain can be an answer for that. It will not be an answer in the next year, it will not be an answer in the next 2 years, but when you look at the next decade, there will be a transformation that will also involve blockchain as an enabler, as a fundamental enabler of a new way of doing insurance, reinsurance, risk transfers, and risk distribution. Okay. So we've been discussing quite a bit on, and there is also a panel in the afternoon discussing about the adoption of blockchain, how relevant is it for the finance community at large. I just wanted to put a few numbers here. So the blockchain investments are growing, and there is additional attention. There will be additional attention in the coming years. I just touched one point, which is the investment that were received in blockchain startups in 2021. Those startups received 25 billion, which is around 10 times what they received in the previous year. So clearly the momentum is not gone, and there is a transformation on the use cases. Initially it was a lot on cryptos, now it is extending more into other areas. It is extending clearly remaining in finance, but it is extending in process manufacturing, it is going into discrete manufacturing, it is entering into retail, into professional service. But blockchain as a whole will represent a strong growth engine, particularly for finance in the coming decade. Of course, what are the differentials? I mean, we are quite qualified audience, so I won't spend much on blockchain as a whole. But I just want to touch on the two elements that make blockchain a good enabler for what will be the transformation in insurance. One of them is that blockchain represents a single source of truth, fundamental to make sure that throughout the value chain, the data, the information is the claim experience is shared in a consistent way. And the second element is that the possibility of having smart contracts, so of including self-executing code within the blocks, makes them particularly suitable to ensure automated transfer of value between different actors. So, of course, there are technology enablers. They have been discussed at large, so I'm not going to touch them in detail. But the technology is not the only enabler. We discussed yesterday, particularly about regulation. The ability of making sure that regulation is embedded by design into an insurance blockchain solution is fundamental to make it succeed in the market. Same partnerships and involvement of the extended value chain is another fundamental element to make sure that in addition to the technology, the desired blockchain-based solution becomes a success. And so every design, every attempt in this, in the finance and particularly in the insurance industry, we need to take care and to take into consideration technology, but also regulation and also the business partnerships and the ecosystem and the standardization in which it is operating. So when we analyze the insurance value chain, and we have just a simplified version of the value chain here on the slide, we believe that there are multiple opportunities to use blockchain. Let's start analyzing the risk underwriting. In risk underwriting, I mean contract certainty and identity management are clear challenges that all the underwriters are facing. And here blockchain can clearly play a role because it can bring an immutable contract logic with digital validity, which can solve the whole set of use cases. When we analyze the policy and premium management, we have manual processes, we have latency in processing and in pairing, and even here the possibility of having the self-executing and disputeless IOUs is fundamental. I mean, it is something that will change the industry in the coming few years. Claim handling is very clear. I mean, there is the need of aligning claim experience and the whole set of information across the value chain. So it is a place where blockchain can play a role, will play a role. And the last element is financial segment. This is the one that is near to the broader financial services industry, but is also something for the nature of insurance that is fundamentally embedded into an insurance product. So, if we try to identify the areas where we do believe that blockchain can have the biggest impact in insurance, we can basically identify six main areas and 6 main use cases. The first one is we discussed quite a bit already, is the claim processing, where we do see the possibility of having automated claim processing and of having the claim experience, the claim information recorded throughout the entire value chain on the blocks. The second one is reinsurance. The automation of treaties and the payouts of reinsurance claims is an area which constitutes a major area of potential development. Risk tokenization, I'll be talking a bit about that a bit more in detail, but it's also a place where there can be a lot of efficiency created. I mean, taking the risk, taking it to bulks, securitizing it, transforming it into tokens and placing it into the market is something that will come out quite a bit in the coming few years. The digital identity, there are multiple use cases. A few of them are linked to governments. I mean, we have seen what India has recently developed in terms of validation of the digital identities, blockchain based. This is something that will be at the intersection between government and private entities. But their blockchain will also represent a tool for making the entire identification and validation more seamless and more cost efficient. Data pooling across the value chain will also constitute data pooling with consistency across the various actors will also play a relevant role. And in the end, the dream of an fully automated insurer is something that might come. When I say full automated insurers, I mean that in theoretical terms, and it is something that we see across the years, many of the intermediaries throughout the value chain will start compressing their role, specializing their role, but there will be, because technology will enable that transparency, that streamlining, there will be the possibility that we are seeing, for example, in travel now already, to have immediate a subscription of a policy, automation of all the internal processes, and automated claim settlement, depending on a series of actions or triggers that might happen in the chain or through oracles outside of the chain. So we do envision a scenario where in the future, in the next decade, we will be seeing the first full automated insurers in the market, and that will be a major transformation for the market. So what are we doing? And I just spent a couple of words to give a bit of Q&A. So as Rahul was nicely saying, we are an insurtech player. We are one of the main insurtech players in the MENA region. We try to innovate insurance through incentive that we give to users. We try to trust users much more than the traditional insurance companies are doing. We try to innovate pricing. We're much more granular and segmented, and we use technology to price in what we say in a fairer way, but in actually is in a more differentiated way. And we try to innovate an experience by providing an extreme convenient experience. Because when you ask people what they want about insurance, of course they say, I would like to improve the claims, I would like to improve the way customer care interacts, but in the end, people would like not to deal with insurance at all. And that would be their dream. And so what we're trying to do is to bring something that is able to bring so much trust and convenience and fairness that insurance becomes from being an undesired category to something that people love. And we've been doing that since 2019. We are Dubai based, we have our own licenses in the insurance space. We've been growing. From 2019 we have now around 35,000 policies in our portfolio. We are growing quite robustly in the UAE and we are preparing to scale up across coherent regions. Our scale-up model is a model where we deploy the technology stack, a portion of the digital operations, and we partner with one carrier per country, one underwriter per country outside of the UAE, which we deem reliable and a carrier willing to experiment with us, new pricing model, new trusted users, and a new digital proposition. So we are basically between like a fully fledged insurer and a technology partner to try to transform the way insurance is sold and the way the value chain operates. So when it comes to the value chain, I was discussing the blockchain in insurance earlier on. We are preparing a product which has been in the making for quite a while, for a couple of years. And that is basically a product that is designed to make the value chain more efficient. And particularly to make sure that the underwriting capital providers can interact better with the insurers, and then the insurers and the capital providers can get more transparency and more information from the end users, from the end user portfolios that are fundamental to take the early investment decisions. So to do that, we designed a solution that, again, try to make both sides of the markets happier. Underwriting capital providers being able to get access to more risk, to a risk that they understand better, and to be able to withhold a higher percentage of the premiums, of the collateral that is being allocated to respond to the risk and to cover the risk throughout the value chain, reducing the amount of money that is being distributed throughout the chain. And of course, for the end users, it is something that will enable users to receive more targeted insurance services, and it will enable them to get more innovation, because by creating this more direct link between the capital providers and the users, we'll be able to get more willingness to experiment in pricing and in the products. So this is what we're building. I mean, the business model will be is designed in such a way that it will resemble, it will be a combination between air insurance, a risk transfer facility, and the tokenized and securitization risk transfer facility, tokenized risk transfer facility. And that will operate on one side as a traditional reinsurer, taking portion of the risk through treaties with the carriers that we are partnering with in different geographies. And on the other side, we'll cooperate with the carriers to put in the market with direct end users a full digital solution to monitor exactly what the way the portfolio is evolving on a granular basis. So that we basically try to join the two extremes by keeping the insurer as the central component of the chain at the national level, but enabling an extension towards the capital providers and towards the users.
Very informative. Now there are a few things that you and I know, Nicola. Insurance, despite being one of the oldest sectors, one of the largest industries, one of the biggest revenue generators, and one of the biggest employers across the globe. Why do you think the technology inducement or attachment has been delayed for so long? You and I think we had a very brief chat on that Saturday evening, right? Where we spoke about how the insurance industry there's been a delayed technology enhancement or inducement into it, but how they adapted to it over the last 2 years, right, during the pandemic. But do you know, or can we talk about why has there been this delay?
I can give my view. Of course, I will be giving a partial view. Insurance is a complex industry. It's complex in terms of value chain, is fully regulated, and is complex in terms of regulation. It is particularly true in this region where regulation is fragmented, and so the scale up of technology solutions faces multiple frictions, because technology solutions, they would like to grow freely, grow quickly, and expand in a market like the US or Europe, where you can really design a solution and then expand to 500 million inhabitants. Clearly, the insurance industry has been very protective, as you were rightly saying, for jobs protection, for protection of existing positions, and customers, and of course of customers. Like innovation comes with risk, also protection of customers. So the regulators have been throughout the world quite conscious and quite, I would say, late adopters of the technologies and of the business models into the regulatory frameworks. What I've seen in the last couple of years is that throughout the world, but also at the regional level, there has been an increased interest. So regulators are understanding that to make sure that users get the highest value and that they get the maximum, that they reduce the friction, and so the money spent and taken away from the consumer benefits, it is needed to enable the transformation, at least to a certain extent. So any model will still require some kind of deep interaction with the regulatory frameworks and bodies, but I do believe that this wave is on the right way.
Amazing.
Not just a deep interaction. I think we require to, if I can say it politically, if I can politically put it right, then we'll actually need to form a cartel and start talking to the insurance regulatory authorities across the globe to try and loosen up a bit. Completely agree with the value chain being difficult, being complex. What's more complex is the regulations continent-wise, country-wise, and the US it's more complex because it's state-wise regulations, right?
Well done, guys.